My name's Alan Carter. I'm the president and CEO of Cabral Gold. We currently have 4 rigs turning at our Cuiú Cuiú project in northern Brazil. We have a resource estimate from 2018 that amounts to about 1 million ounces and that was based on 30,000 meters. Since then, we've drilled another 30,000 meters and we've discovered a number of new deposits there, notably 3 new oxide deposits. There are also a couple of hard rock deposits. So we're very busy, lots of rigs turning, lots of news, and it should be an exciting few months for Cabral.
Alan, good to see you. We have spoken since I last did an interview with you in, I think, end of November on a few things, and you've done a technical interview as well, which I thought was extremely good. But worth a catch up because you've been putting out press releases for fun at the moment. And I'm not quite sure where to look because we got very excited about the oxides, as we should, because it could be near-term cash for you. Then you've been banging out these high-grade intercepts over decent intervals. So where do you want to start? Because talk about optionality.
Yeah, well, as you know, Matt, I mean, Cuiú Cuiú is a district. So I think when we first met probably a couple of years ago, I was talking about the district scale potential of this. And that's really sort of starting to come to fruition because we are tackling a number of different targets. We've got, almost 50 targets here. We've got 2 deposits that we knew about back in 2018, but since then we've been very busy. Last year, or in the last 12 months, we've discovered 3 oxide deposits that are at surface in unconsolidated material, and we're also getting more and more confident about the possibility of 2 additional hard rock deposits. So, I mean, it really is starting to look like a very big district. So, I mean, I don't know. We can start and talk about the oxides if you like.
Well, let's do it. We've had a few questions in about the oxides because I think as you've started to tell that story, people got excited about the sort of near-term cash potential of that and what that could mean for developing the district. Because the difficulty with developing district-wide opportunities is it takes a lot of cash, it takes a lot of money, and for mostly juniors aren't able to do that, or they have to dilute. It becomes a very convoluted story as a result. But with the oxides comes this opportunity. So how's that progressing? Have you got distracted by these high grade components, or was that still very much, the oxide still very much front and center and on focus?
No, I mean, look, we've got 4 rigs running right now. So, most of our effort is still going into looking at the hard rock upside here, and there's a lot of it. I mean, most of the 1 million ounce resource that I mentioned at the outset here a few minutes ago, back in 2018, is hard rock material. Since April of 2021, we've now discovered, and since I last spoke to you, we've discovered an additional deposit. So we've now got 3 of these blankets, which are in unconsolidated material, i.e. stuff that's not going to require any drilling or blasting. So the mining costs on this would be very, very low. It's at surface. This material was assumed back in 2018 to be waste that would have to be stripped off to get to the underlying deposits underneath. So look, I mean, a significant part of our effort is going on to drilling these things off. When we last spoke 3 months ago, we were confident that we had 2 deposits. We do. There's no resource on either of those yet. We will be updating the resource estimate later this year, the global resource estimate for the district, including the oxide and the hard rock material. But since we last spoke, we're now getting more and more confident about a third oxide deposit sitting above central. We've just drilled 80 plus meters at 0.7. We're getting some 50 meters at a gram. This is in the 3rd area. So as you suggest, the next real step for us in the next few months is to drill off this 3rd one. We're pretty confident about the dimensions on the first 2. That there is still upside to the first 2, but I think we've got a pretty good grip on really on the size of those 2. But as I said, there is upside. We've done. In the last few months, we've sent about 0.5 ton of material off to a lab in Reno, Nevada, that's a specialist in heap leach metallurgical studies. And so we should get those metallurgical results back April, perhaps May, and we'll know if this material is leachable. I mean, if it is, obviously I talked about how low the mining costs are going to be because there's no drilling and blasting, but obviously that feeds through into the processing cost, because what we're not going to need for the oxide material is, massive amount of energy, a massive amount of huge expensive ball mills and secondary and ternary crushing circuits and all the rest of it. I mean, heap leach operations are very, very cheap, very efficient, not just to build in terms of capital. The capital is usually a fraction of what it would be on a big hard rock operation. As you know, G Mining's just released their feasibility study for the project next to us. They're talking about around about 500 million in terms of capex. I mean, for a heap leach thing, and we've got all this oxide material, it will be much, much lower than that. And the operating costs are going to be much, much lower too. So look, the next few months, we'll see us drilling off this third one at Central. Clearly, there are some very thick sections of this material. Obviously, the met work, as I said, in April, May is a potential very significant catalyst for us. After that, we'll then look at a scoping study on the oxide material. But in the meantime, we've also got several rigs running targeting the hard rock material, both at the existing 2 deposits that we know about back in 2018, which, by the way, are growing significantly, and these 2 new hard rock discoveries at Machichie and at PDM, where, again, in the last 3 months, we've released some pretty exciting results on both of those. So there is a lot going on. It's tremendously exciting. It's not like we've got 1 or 2 discoveries. We've got several here. And so, we need to advance all those. I
just want to make it simple because, again, we've had a bunch of questions sort of sent in and people with varying degrees of understanding. So the oxide blanket at surface, so oxide means cheaper, less energy required to process.
Much less,
right?
Yeah.
Heap leach, cheap. But it formerly was considered waste or overburden. You are going to be able to monetize that, right? So it will more than pay for itself. It will contribute towards the ability to go hunting for the high grade stuff. Now, because you've removed this overburden and making money on it, the margins on the high grade stuff are going to be improved as a result too. So is that the kind of way the simple economics work on this?
Yeah, if we were to mine the oxide material first, it'll have to be mined first because it's sitting on top of the underlying hard rock deposits. All that material, as you rightly suggest, the oxide material on the top was assumed to be waste that would have to be stripped off. And obviously, there's a cost to moving waste material. It's not going to your mill. It's going to a waste dump. Lots of energy, lots of cost into removing millions of tons of waste material. Now, instead of us removing waste, we're going to be mining and processing ore, right? And so instead of a cost, it's a massive potential revenue generator. And if you look at, we don't have a scoping study yet, but we do know what costs are going into similar sorts of heap leach operations around the world. And there's been some speculation from the analysts that our all-in costs, mining and processing, all-in costs on a per ounce basis, looking at our grades, might be in the order of $1,000 an ounce. Now, I can tell you, to me, that seems a little bit high, but let's just work with that number. Again, that's not our number. That's a number one of the analysts put out recently. Well, that means that there's $850 of profit from every ounce of gold you're going to recover from a heap leach operation. So they are not common, these oxide deposits, and most people know what tons and grades are. And the grades in the oxide material are lower, but the costs are just so much lower, Matt. I mean, it is an enormous opportunity for us because the capital costs are so low and the operating costs are low. Obviously, it gives us an opportunity to jump off the hamster wheel. The hamster wheel being, for an exploration company like ours, drill, raise money, dilute, drill, raise money, dilute. Now, if we can get one or two or three of these oxide things into production in the next 12 to 18 months, obviously we're off the hamster wheel.
Yeah, absolutely. And I think that's the thing that sort of intrigued me about this project early on, certainly when we started talking about the oxide blanket, was when companies come and talk to me and say, we've got a district-wide opportunity, I see liability. Because there's a ton of money, takes a ton of time, people lose interest, especially if you don't deliver, and as you say, that you follow that hamster wheel process, as it were. And you've got the opportunity of being, I guess, recategorized as a producer at the point that you do that. I know. Hopefully, you'll soon give guidance as to allow us to be able to work out some numbers ourselves about what the potential of that could be, but. Coming on to the kind of high grade component here is, you've got a district-wide opportunity, but at the same time, the high grade ore body has a certain structure and pattern to it, and you're trying to figure that out at the moment. It's early days. So what can you tell us? Because some of the numbers that you put out here are so different from anything we've ever talked about, certainly in the early days. Even you must be surprised at the grades that you're seeing.
Yeah, I mean, it's keeping me awake in a positive sense. I mean, there are some stunning numbers coming out, and I think a lot of people look at our resource estimate from 2018, and the resource estimate is around about 1.2 grams a ton, and then the assumption becomes, well, this is low grade. Why should this be of interest to me? Well, the 2018 resource estimate was based on 30,000 meters. We've since drilled another 30,000 meters, and in the next sort of 6 to 9 months, we're going to drill another 30,000 meters. So we will have, by the end of this year, tripled the amount of drilling that went into the 2018 resource estimate. The other thing about the 2018 resource estimate, when you look at the press release from back then, and I encourage everybody to go back and look at it, I think it was May, June, we had Micon, who's a Toronto engineering firm, do the estimate. There was a lot of high-grade material that didn't get into the estimate that we drilled. For example, and the engineers, as you know, Matt, when you do a resource estimate, they put a top cut. So they put a sort of a maximum number. So your drill results, which are above that level, let's say it's 25 grams a ton. If you drill 50 grams a ton, then the resource estimate assumes that intercept is 25 grams a ton, right? Now, G Mining's is right next door to us, and they have a top cut of 25 grams a ton. So obviously, some of the high-grade intercepts were dumbed down, if you like, to about 25 grams a ton. Our resource estimate from 2018 has different top cuts depending on which zone we're talking about. As I said, we've got 2 deposits. They've got different zones. But the top cuts range anywhere from 2 grams to 20 grams a ton, much, much lower than G Mining's resource estimate. What does that mean? Well, that means that all this multi-ounce drill intercepts that we got that didn't make it into the resource estimate. So there was an awful lot of high-grade mineralization back in 2018, about 500,000 ounces actually, that didn't make it into the estimate. And as I said, since then, we've drilled an awful lot more. So they're really, to be fair to, the other thing about the 2018 estimate, to be fair to the resource estimators back then, we have enough drill information to provide them with shapes of the high-grade zones. But there are high-grade zones at MG and Central, as you're seeing. So they didn't have shapes of the high-grade zones, so difficult to sort of model the high-grade zones out separately. And now a big part of our effort right now is going into getting enough drill holes into these high-grade zones to model them. So, as you know, just in the last couple of weeks, we've just put out numbers from Central, 23.8 meters at about 5.5 grams. And within that, there was some spectacular real bonanza stuff, 2-3 ounces. And so we've got quite a lot of that sort of material. And this new high-grade discovery that we've made, the PDM that we first put out in December, again, since our last conversation, that was, I've got it here somewhere, that was 22.4 meters at 4.8 grams. And that's in a brand new zone, right? So there's a lot of very good high-grade material in several areas of the, the underlying hard rock material here. It's very exciting. Extremely exciting for us.
It's very exciting, but it's also, as I said at the outset, I'm not quite sure where to look because the market loves big high grade numbers in your headlines, and you're definitely you're able to do that, right? But for you as a business, what I want to understand is that you've got a plan, and you're in control of that plan, and you're going to clearly articulate how you're going to deliver that plan. So I'm hearing at the moment it's still, let's get this money out of the ground on the oxide component because it's cheap, it's quick, it's easy, possible re-rate opportunity, but it funds our ongoing plans and obviously reduces the OPEX on going after this high grade. But you've got a lot of land package there. So you'll have a producing component here, you've got a lot of land package, you've got a district. How do you compartmentalize your approach to understanding the district, the ore body that you're seeing here? Because you may have several different things going on underground. So again, how does this thing work? How do you create value on the high grade stuff going forward? There are
three general broad objectives to what we're doing. The first one is, which is the primary objective in order of importance, is the definition of these high-grade zones within the primary hard rock deposits. So that's the two deposits that we knew about back in 2018, Central and MG, which are both growing. But defining the high-grade zones within those two deposits is the key objective. Now, in addition to that, we now have two new high-grade zones in hard rock material that were not part of the 2018 estimate, and two new discoveries. One at this Machichie area. We're doing some trenching there right now. We've just done a 300-meter step out and got some really nice numbers, 300 meters west of the most westerly drill hole. But there and the PDM one that I just mentioned to you, where we've just drilled 22.4 meters at 4.8 grams. That's the primary objective. The secondary objective really is to advance these various oxide deposits, which 12 months ago we had no idea existed. So that is also important to us because, as you rightly point out, it gives us the possibility to basically get into production in the short term and probably make an enormous amount of money from mining and processing the oxide material. The third objective, Matt, is going to be to continue to test some of these regional targets around within the claim block where we've got veins sticking out of the ground. We've got great trench numbers. As you know, we've drilled a few holes in some of these other targets and got some spectacular numbers. I mean, you talk about for example, Central Southeast, which is a target where we've only got about 4 or 5 holes, and it's 500 meters away from one of the known deposits. We've got 27 meters at 6.9 grams there, right? I mean, that's just an example. So that, and now we've got this new Escondido target, which again has come up since I last spoke to you in the last 3 months, where there's this giant, very strong mag feature. It's a lookalike for MG, the MG gold deposit. And now we've got multi-gram numbers in stream sediments. Stream sediments do not have multi-gram numbers. Stream sediment anomalies are measured in parts per billion. Right, these numbers in the streams at Escondido are multi-gram numbers. They're really kind of off the chart. They're very, very high. There has to be something associated with that target. So that's the third objective. But obviously, so those are our priorities, and that's what we're going to be doing.
Can you fund all of that right from where you are today? Will you need to go and get a little bit more money?
We're funded through to the end of this the current drill program in June. So, we will look at raising more money. I mean, obviously, we're going to need to raise some more money. The question is at what price you do it and how much dilution you take. So, it's encouraging to me that the market seems to have picked up a little bit lately because we've been putting out drill results in the last 3 months, and fantastic drill results, and the stock really hasn't responded, but it's now starting to respond. Obviously, as I said, we're in an area now which is going to be a huge new gold producing district. And our area, as you know, during the gold rush that happened 40 years ago has the biggest placer footprint. There was 10 times more gold come out of our area from the streams, all informal mining, than was extracted from G Mining's area, which is right next door to us. And G Mining's mine is going to be Brazil's third largest gold mine. Construction is going to start mid this year. And we're right next door to it with something that's got a historic footprint 10 times bigger.